Thank you so much, Shrikant. Great speaking with you. We turn our focus to our company now, which has posted a stellar set of numbers in Q3. We'll be joined by the management in just a minute. But before that, Anushi, who tracks the space very closely, is setting up the conversation for us.
Right, thanks for that, Tamanna. So the key takeaway for the Brigade Enterprises is its pre-sales number. Now, we have looked at a strong number, 29% of the growth. And this is despite some of the challenges in terms of where the approvals are concerned have been persisting, and especially in South markets. We've spoken about this in the second quarter as well, that the residential market had seen challenges related to approval. So strong sign in terms of where the pre-sales growth is concerned. Pre-sales volume is concerned, 29% of an uptick here. While if you look at the bookings, that have risen up to 63% at 2,492 crore. Collections also a healthy growth of 27% is what we are seeing. Now this growth that we are looking at in terms of the pre-sales, it is a mix of both the new launches. We had 2 new launches in the quarter gone by and some steady sustenance sales, which is from the previous launches also continuing. Average realizations has continued to improve for the company. This is on the account of the better product mix, which has the commentary on how these realizations are expected to shape up in the upcoming quarters is something we should be watching out for. And 9 month, if you look at the pre-sales number, that stood at 5,400 crore, achieving at 68% guidance. So this is overall in terms of what we should be looking out for Brigade Enterprises. Even in the lease rental business, they were achieved up to 98% of an overall leasing.
Okay, Pavitra Shankar with us, MD of Brigade Enterprises, joining on the show. Pavitra, great to speak with you, and thank you so much for your time with us here on NDTV Profit. It's been a good quarter on the face of it, and I think why the street is also excited today is because there were expectations that the approval issues that we've discussed last quarter would sustain. Let's start with some visibility on that. Has there been some kind of a resolution of those approval issues in the state? And is that what has also lent itself to the kind of numbers that we're seeing?
I think we do still have approval delays. It's a little slower than what we would like. But fact of the matter is we're working through them. We do have a very strong pipeline of launches. So they're coming through. We're happy we showed good sales, but we would have liked to have more launches because they're ready and in the entire approval cycle. Same story goes for Q4. We have always communicated that our numbers are heavily dependent on launches, although we are still seeing good show on the sustenance sales aspect. So our performance still depends on these approvals coming through. I wouldn't say it's resolved. It's just that we are working through them, and over time we're getting the approvals out. I think that's standard across what others are also seeing.
Just one follow-up on that. When you say you're working through them, and the context of me asking this question is trying to understand sustainability, because are your Q4 launches then going to be on track? The solutions that you found in Q3, though not entirely to your satisfaction, can they continue? Just trying to get a sense here on how far this problem is behind you in terms of how it's impacting your performance.
Well, I would say, we're across 3 different markets in South India, so Bangalore, Chennai, and Hyderabad. Hyderabad, our approvals are through, so we don't have any approval dependency for the remainder of our launches. For Chennai, we have a couple of them, and hopefully are towards the end of the process in another project. In Bangalore also, we're towards the end of the cycle for the projects that we wanted to launch this quarter. So what could happen is that they could slip into the next quarter, but we're not looking at heavy delays where we're not having any visibility. It's just that in terms of timing and in terms of what we'd like to see on a quarter-on-quarter basis, it's sort of not up to par with what we would like.
Pavitra, good morning. Neeraj here. So this 12 million square feet launch pipeline, that am I understanding this correctly? You're saying is not heavily dependent on timely execution due to approvals. Yes, approvals would help you execute in the way you want, but suffice to say that this pipeline is the one which provides strong visibility for growth.
No, my comments were actually related to Q4.
Only
when
Q4.
I say rolling, so the 12 million is actually applicable for the next 4 quarters.
Yeah, of course.
I have good visibility for Q4, but beyond that, of course, like we are still in various other stages of approvals for the launches that are coming out in say Q1 FY26 and beyond. So for Q4, we have decent visibility. And I think for the remainder of the next 3 quarters after that, we are still working through those.
Some interesting signings, West Chennai, Bengaluru, etc. on Whitefield. I just wondering, are you sticking to the product offerings that you've consistently worked for you, Pavitra, or are you moving up the notch a little bit? Because I'm presuming that real estate prices, they haven't moved up in Mumbai at all, or very marginally, but I'm guessing in the markets that you're operating in, there are some upsides that you've seen.
Then it's a good time for you to buy, Neeraj, if they haven't moved up at all.
You think Mumbai prices will move up?
I'm not as familiar with that market, but it's a great market. In Bangalore, where we have predominantly a lot of our portfolio, we are seeing prices increase across our portfolio. We've seen it improve 37 to 40% year over year. But that's a mix from both. A comment to what you were saying about the product mix, is it changing? For sure, for Brigade, over the last year, we have gone into the more premium segment, whether it is Brigade Icon in Chennai, Brigade Gateway in Hyderabad, Brigade Insignia in Bangalore. These are all much higher end launches, and that's also contributed to the increase in the overall price, the average price realization that we're showing. That said, the average price for just mid-segment and upper mid-segment has also gone up. So that has also contributed to the increase in pricing. Overall, I think we are looking at maybe 20-25% of our portfolio coming in from the premium segment. But I think we will still continue focusing on mid-segment and upper mid-segment, because that's where the true demand comes in, and that's where we see a more scalable opportunity, whether we're talking about Bangalore, Chennai, or Hyderabad.
Pavitra, just one point on the core numbers and the margins that we've seen this time round, robust improvement. What is contributing to this? And is this now the metric that you're looking at in terms of margin, the 28% range?
So the margins, if you're looking across Brigade Enterprises, it's contributed both by the office segment, hospitality, and residential. Residential, some of the projects that are coming up for the revenue recognition have been able to show, we've been able to lock in those higher margins. So that's why you're seeing that overall increase compared to a few years ago, where some of those projects were slightly lower margin. The price increases that have been coming through, the land costs at which we were able to acquire these projects that are getting registered today, all of those things are contributing to these higher margins. But I think, apart from like a few basis points difference here and there, it's more or less what we will see going forward, because the projects that are being sold and constructed over the next couple of years is where we've seen the higher price realization. So I think the margin outlook is still pretty good in that sense.
Pavitra, we're speaking with you a couple of days before the union budget. What is your expectation from an industry perspective and from a company perspective?
Quite honestly, the real estate industry keeps asking for a few things. Typically, the industry status for the sector, which would help in terms of lower, interest costs and single window clearance and faster approvals and streamlining of a lot of the regulations. I think while it's not necessarily part of the union budget, GST is something that really has to be rationalized, not just for real estate, but also related sectors like, the GST rate on cement, which is, say, 28%, extremely high. Definitely some more incentives for home buyers. Interest rates are good, but it would certainly help if interest rates were also lowered and some kind of tax benefit reintroduced on affordable housing. Affordable housing is something that I think should be on the government's radar, just because we are seeing a dramatic ramp up in pricing, and at some point, affordable needs to be a priority again. So whether it is in terms of bringing back something like the Section 80IB benefit, maybe lowering GST on input costs for the affordable housing segment, even relooking at what should be considered affordable housing. Today, it is still 45 lakhs, which is considered as the ticket size limit for affordable housing, which where customers can avail of a 1% GST for those kind of products. That's been the same since 2016 or 17, whenever the regulation was first introduced. So I think all of those things would really help if we could make a kind request.
Well, maybe some bit of it is being heard through this medium. If not now, then digitally at a later point of time, Pavitra. But wishing you all the best for all of the approvals and execution of this very healthy pipeline for the next 12, 24, 36 months. Thanks so much for speaking to us today.
Thank you so much.
That's Pavitra Shankar of Brigade. The stock is duly reacting to the kind of numbers that they came out with. As is KPIT, by the way, to the